So I would pick a broad index, but I wouldn't toss a chunk in at any one time. I would do it over a period of time, because the very nature of index funds is that you are saying, I think America's business is going to do well over, or reasonably well over, a long period of time, but I don't know enough to pick the winners, and I don't know enough to pick the winning times. There's nothing wrong with that. I don't know enough to pick the winning times. Occasionally I think I know enough to pick a winner, but not very often. And I certainly can't pick winners by going down through the whole list and saying this is a winner and this isn't, and so on. So the important thing to do, if you have an overall feeling that business is a reasonable place to have your money over a long period of time, is to invest over a long period of time and not make any bet implicitly by putting a big chunk in at a given time.
As Warren Buffett was just saying, you should be invested into the market if you're a long-term investor. He was picking the S&P 500 just as an example. And basically, if you invested into that market, you would have done really well over the last couple of years. However, the market situation really changed. We're facing right now a pandemic situation we're still in, hopefully phasing out of that really soon. On top of that, we do face the situation where the inflation rate is really peaking, and unfortunately, really devastating situation happening in the Ukraine, where people's lives are in threat, and that obviously does impact the market as well. Should we be investing into this market situation we're in right now in those crazy times, or should we rather be holding back? That's exactly what we want to discuss today. Guys, I'm Björn, and welcome. This is the Avenue to Revenue. Guys, as you can see, the situation here is a little different today. So you may hear a few sounds in the background, some wind noises, quite windy. So please excuse for that. Anyways, let's have a look on what we have on our agenda today. Basically, should we be investing in those crazy times, or should we rather hold back? The market is going zigzag, but let's play the situation first. If we don't invest, if we just hold back, what's happening with our money? Basically, if we don't do anything, we keep the money in the bank account. Due to the high inflation rate, we're losing money. On top of that, the commodities prices are increasing, we're losing even more money, which would be devastating because we really want to be building wealth and we don't want to lose money. So not doing anything is not an alternative. What is the alternative though? If we look at the market, we've seen so many all-time highs. Should we be really investing at an all-time high? Should we wait until a low price and then invest? So the gain, the delta is bigger. In theory, yes, but how do you time the market? Just not possible, right? So let's define first what an all-time high means. An all-time high means that the price of a certain asset has broken all of its past records, and now it's trading at the highest price it has ever been achieved. As we've been just seeing that the commodity index is really high in 2021, the energy prices in particular outstanding and really high. So we're losing more and more money while not doing anything or keeping the money on our bank account. Looking into the market, this is long-term S&P 500 situation from 1982 until today. You see a really nice gain and growth of the index. In black, in green, you can see highlighted that there are lots of all-time highs. And when I say lots, there were so many. And how would you be able to pick an all-time high, sell, wait for a dip, and then hopefully identify the dip and then invest? So as this is just not possible, even the big traders or investors, just like Warren Buffett, they don't really know. So what should you do? You should be continuously investing into the market. Continue, because even investing at an all-time high is just a matter of question until the next all-time high is knocking at the door, and is replacing the previous all-time high. So as a long-term investor, you don't have to worry about all-time highs at all. So if people are talking about this, they might be traders. Long-term investor, you don't have to worry about that. Just looking at the year 2021, there were more than 68 all-time highs. So record-breaking. It's actually the second most ever being recorded, and it's also the most all-time highs in the past 26 years. You see, if you would have waited, the next all-time high was already right next door, waiting for replacing the previous all-time high. So continue to invest even at all-time highs. Buy and hold. That's the strategy. Don't worry about it. Don't worry about market timing. If you invest, keep on investing every month, every quarter, whenever you invest. So I'm investing every single month. Automatically, out of my salary, a proportion is going into the market, and I don't worry about it. I just don't worry about it. If it's going down, if it's going up the next month or 2 months, maybe a year or so, I don't care, because I don't need the money within the next couple of years. It's a long-term investment. I don't really want to touch it the next 10, 15 years. So, and in the next 10, 15 years, I strongly believe the market is in a better situation as it is right now. If you don't invest, as Peter Lynch is actually saying, one of the great investors in the past, he was saying that you actually lose more money if you're not invested. So also Peter Lynch is backing up what Warren Buffett was saying. So the opportunity cost of missing those gains within the market is just too high. So be in the market if you're a long-term investor. I know there are studies out there that you can actually, if you put all in your money right now, you'll be better off. But we are human beings. We are not 100% rational. And therefore, that's also what I'm doing. If I'm having a big chunk of money, I'd rather invest into, or put it into pieces and then invest step by step. And I actually do a plan for this every time. So I stupidly follow this plan. So I'm not waiting for, the market is just at an all-time high. So should I be waiting for the next dip? No, the plan's the plan. You invest, and again, if you look back the next 10, 15 years, if the price would be, 50 cent higher, or 10 euro higher or lower, really doesn't matter. But again, that was the situation talking about the pandemic and all-time high situation. But what about the situation we're also facing right now, which is the devastating situation, the conflict in Ukraine? Should we be investing in this situation? Because it's just a crazy situation we're in. Let's have a look of what Warren Buffett is saying, and have a look at this article here. He's basically saying that he would be still buying the stocks. He also saying if the prices are going down, you can get bargains. You can even watch out for opportunities, as people, as I was saying before, human beings, they're emotional, and they're also selling. Some people need to get their money on really quickly, therefore they need to sell because they don't have probably set up a proper emergency fund, which is so important. You need to do. We're going to discuss later. So take opportunity of that. If the market is going down, look for bargains, and you can, besides your continuous investment, you potentially could buy additional bargains. And also Warren Buffett is saying that if you're going to invest your money in something over time, the one thing you could be quite sure is that in a major war, the value of money would go down. And this is a person who has been more than 60 years an investor. He has seen lots of crises and conflicts. So I really trust this person. And again, on top of that due to war or conflicts, the value of money is decreasing. We've got the inflation rate as well. Put the money where it's probably more stable. That's at least what I'm doing, because I ultimately want to build wealth, want to be independent, want to spend more time when the sun is out and relax and don't worry about too many things. So as a conclusion, long-term investors don't have to worry about at all about the all-time highs. Keep on investing. Don't follow the media. The media is there on purpose. They're short-term thinking. They need to. They get money obviously by building and creating new articles, and also creating fear. And so stay away from that. It might be important for traders, if day traders, if they want to, follow the latest news. If they want to buy and sell, that would be way too stressful for me, and also way too risky at the same time. So don't worry about those all-time highs. Continue to invest, even at times of conflict, and look for opportunities to buy potentially even more. As I was pointing out before, if you want to invest right now, go for it. But make sure before doing so, you have set up a proper emergency fund. If you don't know what an emergency fund is and how much you should be putting into this emergency fund, have a look at this video, because it's really important to do this first before actually investing. Guys, it's my pleasure. Hopefully see you in the next video. So much looking forward to it. And stay safe, stay healthy. I'll see you next time. This is Björn from the Avenue to Revenue. And by the way, if you have not subscribed, liked, or commented in this section, please do so. I'm more than happy to hear your thoughts on how you're doing with your investments. And let's stay tuned. See you later, guys. Bye.